What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and I hope you all had a fantastic Christmas, great holiday week. Spent some good time with loved ones, with family, and a good Christmas gift that came to any hodlers, anybody who owns any amount of Bitcoin, was that over Christmas we saw a big spike in the price of Bitcoin. We saw it break above that $24,000 mark, and then within just a couple of days had a quick run up to pretty much almost 29,000 there. It's been consolidating since then. So far, that was the peak, and as of this recording, it's been trying to get back above that $27,000 mark. Now, with the recent price rise, as with a big price rise of anything, that's going to attract attention. This brings all these new investors who are new to the Bitcoin space to wonder, how can I invest in Bitcoin? Now, for the average investor, the easiest answer that they usually find is GBTC. That is the Grayscale Bitcoin Trust, and it is publicly traded. And so for the average investor, GBTC usually winds up being what somebody will choose in order to get exposure to the price action of Bitcoin. It's especially true that GBTC is currently the easiest way to get access to just exposure to the price of Bitcoin if you're trying to do it through a retirement account with money that's in like an IRA or a 401k. Now, the problem is that there are huge dangers, potentially big hidden risks by investing in GBTC that have nothing to do with Bitcoin, and nobody's talking about these risks. Luckily, that's what you have me for. So in this video, we're going to look at what those big risks are and why the introduction or the approval of a Bitcoin ETF, a real true Bitcoin ETF, would spell disaster for any investors who have purchased shares of GBTC. Ready? Let's dive in. So in order to understand why the approval of a Bitcoin ETF would pose significant risks to GBTC investors, we first have to look at what is GBTC, because just by definition, we already know here that it is not an ETF. Otherwise, nobody would be talking about the potential coming of an ETF that invests in Bitcoin. So GBTC is the Grayscale Bitcoin Trust, and it is a grantor trust. It is not a stock. It is not an ETF. So what difference does it make that this is a grantor trust and not a stock or an ETF? Well, the first difference it makes is that there may potentially be different tax consequences for investors who choose to buy shares of GBTC compared to just holding stocks or ETFs in a brokerage account or an IRA. This is especially true in years in which there are hard forks where things like Bitcoin Cash come into existence, and the trust, since it only invests in Bitcoin, has to sell off that new cryptocurrency. But just because GBTC only invests purely in Bitcoin doesn't mean that it actually follows the price of Bitcoin that closely. In fact, it can be wildly volatile, independent of what the price of Bitcoin actually does. Now, for most of GBTC's history, this volatility has presented itself in the way of a premium. That means that GBTC has normally traded at a premium, and usually a large premium compared to the actual net asset value of the fund. This means that the total value of the portfolio that GBTC has is actually less than the total value of all of its shares put together. Now, said another way, this means that if the price of Bitcoin was completely flat and didn't move, the price of GBTC would still be wildly volatile and have big up and down swings as investors move in and out of the fund. Now, historically, over long periods of time, this hasn't been too big of an issue with GBTC investors, as GBTC has usually traded at a premium to the Bitcoin that it holds, and usually at a large premium, but not always. So far, the peak premium that GBTC traded at compared to its net asset value was 132%, and this was hit May 31st, 2017. So this was about 5-6 months before the big bubble. So yes, you heard that right. GBTC, its share price was trading at over 2 times the amount of Bitcoin that it actually held. From that point, for the next 2 months until the beginning of August, the premium that GBTC traded at went from 132% down to about 70%. So 70%, that's still a big premium, but that premium went down. So here's where things get interesting. During that time, the exact same time frame from May 31st to August 1st, the price of Bitcoin actually rose from about $2,200 to about $2,700. That's about 22% in those 2 months. So Bitcoin, the actual Bitcoin, 22% gain 2 months. In contrast, the price of GBTC went down. It started May 31st, it was at $5.27 a share. By August 1st, it was $4.65 a share, a loss of 12% over the exact same time frame, those 2 months. So even while the underlying asset that GBTC owned was going up, GBTC had been trading at such a premium to the actual Bitcoin that it owned that as that premium declined significantly, it didn't even matter that the assets it held were going up. The price per share of GBTC still actually went down. Now, admittedly, this is an extreme example in GBTC's history, as most of the time it does trade at a decent premium to the Bitcoin that it holds. But it highlights a key important fact and risk that most people never talk about, that GBTC is extremely volatile independent of what Bitcoin itself does. Now, not only is GBTC volatile in comparison to the asset that it holds, Bitcoin, but it is also very expensive. The trust, GBTC, it charges the fund 2% every year just to run the fund. Contrast this with something like SPY, the S&P 500 ETF, charges 0.09% every single year in order to buy the underlying investments. So this massive fee that GBTC is charging its clients in order to hold this Bitcoin causes a slippage in the value of its share price, again, independent of what Bitcoin does. If Bitcoin were to stay extremely steady and flat and not move, just stay exactly the same, you would still see a decline in price of GBTC 2% per year, just owing to the money that the fund is scalping off the top in order to fund its operations. The slippage from the costs, that 2% every year, plus the volatility of GBTC compared to its net asset value, means that while Bitcoin is currently experiencing new highs, it is well above its 2017 peak from that 2017 bubble, GBTC still has not even hit its all-time high that it hit in 2017 at $38.75 per share. Now, as of today, GBTC is still the easiest way for the average investor to get price exposure to Bitcoin. But what if that were to change, and what could possibly make that change? The approval by the SEC, the approval of an ETF that invests in Bitcoin, would be almost 100% sure to change this dynamic. Now, you might be asking, why would the approval of an ETF that does the same thing as GBTC, why would that change things, and why would that pose a risk to GBTC? Well, there are a few reasons. Number one, ETFs are governed and covered by different rules and regulations than grantor trusts are. A grantor trust is governed under the Securities Act of 1933 and the Securities Exchange Act of 1934. But an ETF is, in addition to that, is governed and covered by the Investment Company Act of 1940. Now, from a regulatory standpoint, this means that ETFs are covered by additional investor protections. Now, we can debate all day about the efficacy of those regulations and those rules and those laws, but the fact of the matter is those laws and regulations prevent certain money from entering Bitcoin right now that would almost certainly have some exposure to Bitcoin if an ETF governed by the Investment Company Act of 1940 were to be passed that allowed investors easy access to Bitcoin with the additional regulation that an ETF is covered by versus something that's only covered by the Securities Act of 1934 and the Securities Exchange Act of 1934. So from a regulatory standpoint, it would open the doors for a lot more money to have access to Bitcoin than it does right now. It would allow portfolio managers and investment advisors access to Bitcoin through an SEC-approved ETF that they don't have access to right now because of, again, the regulations. It might be red tape. It might be rules inside the company that they say, hey, we can only invest in certain things like ETFs and mutual funds. Maybe these companies, they don't invest in individual stocks even for their clients. There's lots of money out there that doesn't have access to GBTC where it might have access to an actual SEC-approved ETF. Even people like Kevin O'Leary, the Shark Tank personality, big investor, he runs the O'Leary funds, big fan of ETFs. He's been a big detractor, a public voice against against Bitcoin for a long time, and he said, hey, yeah, I own some Bitcoin, just a very small amount, but if something like an ETF, a Bitcoin ETF were to be approved, I would instantly put, up to 5% of my money in it, because then I know I'm not breaking any rules. Then I know that, I can allocate safely. There's the liquidity there. And so there's a lot of money, even from personal investor money, that is big money, like Kevin O'Leary would potentially be coming into Bitcoin through an ETF, where they're currently staying away from it through GBTC. You also have a lot of self-directed investors accounts that only have access to certain mutual funds or ETFs or publicly traded stocks, and they don't have access to every publicly traded security. They only have access to maybe ETFs or mutual funds. And so the introduction of a Bitcoin ETF would allow a lot of these investors access to it, again, that they don't have access to GBTC. So money managers, small investors, big investors, it would open the door for a lot of that money to potentially access Bitcoin that can't access it yet. But even further than that, it would drastically reduce the costs associated with investing in Bitcoin, because GBTC charges 2%. Quite frankly, because there's no competition. ETFs have much lower costs associated with them, and so you would almost 100% certainly see a Bitcoin ETF charge much, much less than 2% for its clients to have access to Bitcoin. And if two funds invest in the exact same thing, but they have different expenses associated with them, the one with the cheaper expense ratio will outperform. Just like there are hundreds of S&P 500 mutual funds and ETFs today, the ones that perform the best over the longest term are the ones with the lowest expense ratio. They all invest exactly the same way. So the only difference in performance is going to be how much money the fund company scrapes off the top for their fund operations. So the approval of a Bitcoin ETF could absolutely be just a tailwind, further accelerating the price increase in Bitcoin. Because every dollar that buys this new ETF, whenever or if ever it is approved, means that that money is going almost directly into Bitcoin itself through the ETF. This means that the approval of a Bitcoin ETF could lead to a dynamic where GBTC actually falls while Bitcoin is going up. A repeat, but far worse, of what happened from May to August of 2017. Because there's a huge possibility that a not insignificant amount of money will leave GBTC for the lower cost, lower volatility ETF. And this would have no impact on the actual price of Bitcoin. You could see Bitcoin not move at all, because every dollar that leaves GBTC for the new ETF would still be invested in Bitcoin. There might be a little bit of volatility, but ultimately you'd have the same amount of money leave Bitcoin and then go right back into Bitcoin through the different vehicles, going from GBTC to the new ETF. But the dynamics that are currently driving the premium of GBTC higher would reverse itself and lead to a stampede of money fleeing GBTC, simply because its price is falling, where the price of Bitcoin and the price of the new ETF is not. Over the last few months, GBTC has traded around a 30% premium to Bitcoin, but it could easily trade at a 20 to 30% discount to its net asset value. This means that over the course of just a few weeks to a few months, you could easily see a 50% drop. No problem. That would be very easy to see a 50% drop in GBTC, again, with no underlying change in Bitcoin. You could even see that 50% drop in GBTC while the price of Bitcoin continues to climb, let alone the fact that if you see this dynamic happen while the price of Bitcoin is going down, you could see far more than a 50% drop in GBTC. Now, the approval of an ETF, I would guess, probably wouldn't lead to or happen right around the same time as Bitcoin is falling, simply because it would open the doors up to so much more potential money to enter into Bitcoin that you'd probably see a boost in the Bitcoin price, at least in the run up to the knowledge that an approval of a Bitcoin ETF is coming soon, as big money front runs the news. Now, I've said multiple times that GBTC is currently the easiest way for the average investor to get exposure to the price of Bitcoin. But you and I, we're not average investors, and we're not looking for the easiest way, because the easiest way is never the best way. With a little extra effort, you can protect yourself from those downside risks associated with GBTC that, again, are independent of what Bitcoin does. And no, this time it's not options. I know that's what you were thinking, but it's not options. You can't actually trade options on GBTC. So it's not like you can protect yourself from this by just buying puts. Instead, the solution is to actually just buy real Bitcoin. Because if an ETF approval happens, that will probably provide some more tailwinds and boost the price of Bitcoin, at least somewhat. So might as well own the Bitcoin ahead of time so that you can experience that run up in price. Might as well stay away from GBTC and not try and wait and time this perfectly and try and be the first one out the door when the stampede of money exiting GBTC happens, because you might not be able to be the first one out the door. You might end up the bag holder. You might end up the last one out the door selling it when it's at a 20 or a 30% discount. So a couple keys and a couple steps, a couple tips to actually buying real Bitcoin if you've never done that before. Number one, always store it in a wallet. Don't leave it on exchange. So if you use Coinbase or Square, don't just leave it there. When you make the purchase, instantly move it to a wallet. This would be like if you went to a gold dealer and you bought gold coins from them and then you just said, hey, you keep them. Why would you do that? Why would you spend that money and why would you go through that effort just to say, hey, leave it there and continue to have that counterparty risk? Just take it home with you. Now, what are the services and the products that I use here? Number one, for actually buying Bitcoin, my favorite way to buy Bitcoin, stack sats, is the industry term. It really just means dollar cost averaging. It means buying a set amount of dollars worth, every, day or week or month or whatever your choosing is. I really like Swan Bitcoin. It's very secure, very easy, low cost, focused 100% on Bitcoin, none of the other cryptocurrencies, and they'll auto transfer to your wallet, the wallet of your choosing, every time you make a purchase if you like them to. And don't worry, I've got all of these linked in the description below, so you don't have to be typing right now. You can go through and click and check out each one of these if you'd like to look into them yourself. For wallets, for software wallets, I really like Edge and I really like Exodus. Those are two great software wallets. And then for hardware wallets, I like Ledger. And these are, in cold storage, they're not connected to the internet, something you could throw in a safe or something. Now, at this point, you might be thinking, well, that's great, but I want to invest in Bitcoin through my IRA or my 401k. So is GBTC really the only option for me at this point? The answer is no. Use a self-directed IRA, SDIRA, self-directed individual retirement account, sometimes also called alternative investment IRAs. These are simply IRAs that give you access to investments that are, not your typical investments, not your stocks, mutual funds, ETFs. These are IRAs that allow you to invest in things like physical gold, physical real estate, and or cryptocurrencies like Bitcoin. Now, most self-directed IRAs, they're extremely hard to use. They have actual physical paperwork involved in opening them up. They're expensive and they're just archaic the way that they're run. So that's why I use iTrust Capital. They're a newer company, extremely tech focused, very focused on security and easy user interface. And so they're very easy to get started, up and running on them. Just a couple of minutes to set up an account. You can actually store physical gold with them as well. So you'd gold, silver, Bitcoin, and then some of the other cryptocurrencies as well. So they're a great company. I use them. I highly recommend them. And if you use my link in the description below, you get your first month free. You can move an existing amount of money from a retirement account like an IRA or a 401k rollover that you have. You can move that over, or you can just make new contributions like you could any regular IRA. So for now, GBTC might be the easiest way to access exposure to the price of Bitcoin, but it's not cheap. It's far more volatile than Bitcoin itself, and it exposes you to massive downside risks that are independent from the risks associated with just owning Bitcoin. And the approval of a Bitcoin ETF will almost certainly cause these risks to become reality. So if you'd like to protect yourself against those downside risks and you still want exposure to the price of Bitcoin, check out my recommended resources linked in the description below. As always, I really appreciate you guys. You're the best. Have a great day.